My next guest says he's assuming tariffs are here to stay and says investors need to invest accordingly. Joining me now is Bill Stone, the Chief Investment Officer at Glenview Trust. Bill, it's good to see you. So how are you thinking this through?
Yeah, and I think, like you said, there was a brief bit of hope that, at least on the investment side of things, that perhaps the tariffs could get struck down. And I'll say yes, in the original way they're implemented, or many of them are implemented, they may. I don't know one way or the other. But the fact is there's enough other presidential powers that if President Trump wants to have tariffs, he will have his tariffs. I'm highly confident of it. So I just think you have to be ready because the market is, as you know, rebounded so strongly off those April lows, and we're really pricing in a pretty low chance of recession. And again, I don't know if he's going to really pile on a lot more tariffs, and that will pressure the economy a whole lot. I just think when the market's really moved a lot, that the more economically sensitive stocks have moved a lot, it probably pays to look in some places that are, more overlooked and a little neglected right now.
Sure. So what would be some examples of that?
So I got two. One is Constellation Brands. The good news about that is alcohol consumption does not tend to fall during economic downturns. There are some short-term headwinds with them. They're having issue. Their primary moneymaker is Mexican beer. So think, Modelo, Corona. It's having a little tough comparisons versus the previous year. But again, I believe in those brands. I try and do my best to help them out here during the summer. So I think that's a long term. And I'll just say too, the valuation is extremely attractive. Roughly about the cheapest this stock has been since Constellation acquired those brands. And you're in good company because Berkshire Hathaway has been buying quite a bit of the stock.
Totally. I was going to say maybe they should offer an AI feature where you could put yourself in an ad with Snoop drinking a Corona. Do they own Corona on the beach?
They own the only Corona in the U.S. That's one of the knocks against
rights.
them.
Yeah.
Just the U.S. rights.
Yeah, got it. So that's one way that you think you can kind of hide out a little bit here. So you're bracing for a little bit weaker economy?
Yeah, it's more in the sense of the fact that the market is priced in, very low odds now of recession again. And I'm just trying to, lean a little bit against that. Not that I'm predicting recession, but again, you have to kind of keep your eyes wide open. If enough tariffs come back, it certainly will see some headwinds. And I think we're likely to see some of those headwinds in hard data coming up here, because I think we'll get a little bit of a payback for some of the accelerated activity we've had thus far in the year.
Sure. It also takes a strong stomach to pick up shares of Merck down 23% this year.
Yeah. And again, they have the administration has not been as friendly to pharma. Merck has another, I'll say headwind. There's good news and bad news. The good news is they own Keytruda, which has been just a phenomenal success in treating many different types of cancer. The bad news is the patent comes off in 2028, and it will be somewhere approaching maybe 50% of the revenues by that point. So you really have to be a believer that they can restock the cabinet, that they could come up with other versions of Keytruda or versions of it that won't go to generic completely. Stock is really cheap at like 9 times earnings with a nice dividend. So I think you're getting paid to kind of take on that risk. And, I think they're doing a good job of restocking the cabinet.
And tell me why you think Jamie Dimon's wrong about the bond market.
Well, I think eventually he might be right, because isn't there always a crisis at some point? What I'm trying to say is, there is no sign of it at the moment in the sense of in the U.S. You've got 2-year and 10-year yields down year to date. I will say the 30-year yields up. That is a global issue. Long bonds, 30-year bonds are up across the globe. I do think it's some statement by the bond market that they're not as willing to fund these deficits. But I'd argue the U.S. is probably the last of them to get picked on, because we have this extraordinary privilege, as I like to call it, of the global currency, debt only in our own currency. We own the printing press. We also have a very strong and resilient economy overall. So if you're going to kind of look for a place with a crisis, I would probably look elsewhere. Again, it'll happen because we always have some dislocations. It's just, I wouldn't let it keep me up at night for the moment. But we should check on our debt.